Ever wondered who controls an economy's money flow? The journey begins with the birth of central banks in the 17th century. The Bank of England, founded in 1694, was the first modern central bank, designed to serve and support the government's financial needs during frequent wars. This set a precedent for others, like the Bank of North America, which was established in 1781 to bolster the American Revolution's finances. Initially, central banks were government banks, but their roles have expanded over time. How did central banks evolve to become the monetary policy authorities we know today? In their early days, central banks were linked to the gold standard, limiting the amount of money that could be produced. However, the 20th century introduced the fiat money system, freeing currency from gold and enabling central banks to print money as needed. This flexibility marked an important evolution, notably with the establishment of the Federal Reserve in 1913, transforming central banks from passive to active economic players. Central banks began focusing on managing inflation and unemployment through monetary policy and open market operations. Thus, central banks evolved from government banks to the essential monetary policy authorities we see today, guiding our global economy towards growth and stability. How do central banks fit into the political landscape? What's their role and how are they affected by politics? Central bank independence is a key concept here. Essentially, it means that a central bank operates free from political pressures, focusing on core objectives like controlling inflation and stabilizing the economy. This independence allows them to make decisions that may not be immediately popular, but are beneficial in the long run. Yet, central banks are part of the political system and can face pressures. For instance, a government might push for lower interest rates to boost growth before an election. This could lead to decisions favoring short-term gains over long-term stability, resulting in economic policies that are reactive rather than preventive. Hence, central banks, while independent, are not immune to politics. The interplay between politics and central banks is a balancing act between independence and accountability, a continually evolving aspect of our economic system. Central banks are vital to the modern economy, managing interest rates, controlling inflation, and ensuring financial stability. They act as financial conductors, setting the pace for the economic orchestra. Central banks adjust money supply to maintain a balanced inflation rate, essential for preserving the purchasing power of money. They also prevent financial crises by identifying potential risks, even acting as a last resort lender during financial stress. An important tool in their arsenal is the control of excess reserves, which are funds held by commercial banks beyond the minimum required. By manipulating the interest rate on these reserves, central banks can influence lending and economic activity. Higher rates mean less lending, cooling the economy, while lower rates inspire more lending, stimulating the economy. Excess reserves also serve as a safety net in uncertain times, contributing to financial system stability. Hence, through their various central banks play a critical role in shaping our economy. When politics overtakes central banking, it can lead to short-term economic decisions that may have detrimental long-term effects. For example, political pressures could force central banks to lower interest rates for immediate growth, risking inflation or asset bubbles. Governments burdened with debt may resort to creating more money, risking hyperinflation. Political control can also compromise the independence of the central bank, its ability to manage the economy based on economic indicators and long-term forecasts. This could result in economic instability and loss of trust in the country's monetary policy. Political control over central banks might provide immediate remedies, but often at a high long-term economic cost. Let's summarize our journey through central banks' history. Born from necessity, they've transformed from private entities to vital elements in our global economy, with politics playing a key role in this evolution. Central banks have come to manage surplus reserves in modern times, helping maintain economic balance and prevent financial crises. However, their politically influenced decisions can sometimes lead to long-term economic consequences. Despite its complexity, central banking greatly influences our everyday lives and shapes our economic future.